according to Ecobank Research, international oil companies operating in Nigeria would have sold at least 300,000 barrels per day of oil worth of equity in onshore and shallow water producing assets in the oil-producing Niger Delta region, while the corresponding monetary value of these divestments will be in the region of at least $5 billion. Rolake Akinkugbe, head of energy, oil and gas research at Ecobank Group, joins us now for a look at IOC divestments in Nigeria, opportunities, challenges, and outlook. Thank you so much, Rolake, for joining us. Now, according to the Ecobank Research, you're expecting that by the end of 2013, oil companies would have sold at least 300,000 barrels of oil equity. Now, what does this mean for the future of the Nigerian oil market? Does this mean that we might see an exodus of these IOCs?
No, I don't necessarily think it signals an exodus of IOCs. What I think it actually signals is that IOCs are looking to balance their portfolios, their asset portfolios in the upstream sector more towards the offshore region, which now accounts for around 80% of Nigeria's total production. And this trend of divestment is something that started, as far back as 2009, 2010, when Shell first launched one of the largest divestment programs we've seen in Nigeria as a whole. So it also provides an opportunity for local indigenous oil firms to boost their production and play a much more prominent role in the upstream sector in Nigeria.
Now, you also say that this presents a very good opportunities for local or indigenous players to take advantage. Do you think that they're capable, they have the capacity to step up to the plate?
Well, yes, I think they do. But if we look back to what the government tried to do back in the early 2000s with the marginal field program, a lot of those marginal fields were actually awarded both on a discretionary basis and through licensing rounds to local oil companies. And not many of them have had huge success in boosting production or in developing those assets. Right now, local production in Nigeria accounts for only 10% of total production in the country, while marginal fields account for only 2%. So that is still a relatively small figure in terms of the bigger pot of production from Nigeria. But what is hoped with this new divestment round is that the current divestment program will actually have greater success than the marginal field program and will take over from where the marginal field program left up in boosting local production in Nigeria, which is still only around 100,000 barrels production per day.
Now, even if the local players or indigenous players want to take advantage of this, what about the PIB? That's still hanging, and of course that is still creating uncertainty in the market.
Well, yeah, I mean, the PIB is creating uncertainty for everyone, local or foreign, whoever you are. Obviously, if you have a regulatory environment that is in constant flux and is evolving, you don't necessarily want to commit huge amounts of capital investment into production. But some of these assets were held and acquired even prior to the real momentum we're seeing in the PIB. So I think for local companies, the real priority now will be demonstrating that they can develop those assets. But I think one positive sign we're seeing is the fact that many of them have been able to raise significant amounts of capital, not just domestically, but also on foreign capital markets through listings. We're also now seeing local banks playing a much more prominent role in financing some of these new assets. And I think that in itself sends a fairly positive signal as to how people expect the market to evolve in the near term.
Now, you say that this IOCs are just merely balancing their portfolios, but remember that there are new exploration and production frontiers, the recent being that in Congo, Brazzaville, where billions of oil and gas reserves are said to be there just waiting to be explored. Do you think perhaps in terms of balancing their portfolio, they might favor this new frontier and production sites more than that here in Nigeria?
Well, I think that's a good point you make, Esther, because rebalancing of portfolios can also mean looking to other frontiers, not just moving from onshore to the offshore. If we look within the region, West Africa, the Gulf of Guinea, there's several new producers, Ghana being one example. Other parts of the Gulf of Guinea also declaring new discoveries, particularly in pre-salt layers in places like Gabon, which recently discovered gas, and Congo Brazzaville, where Italian IOC Eni recently made a huge find in the marine block. But the other thing to bear in mind is that when you compare the reserves base of Nigeria versus some of these other countries, Nigeria still ranks fairly highly in the league tables because Nigeria hosts around 37 billion barrels. But it certainly is no room for complacency, because I think the divestment trend we're seeing are a reflection of a host of factors, not least onshore operating and security difficulties in the Delta, the general global reallocation of capital between different parts of the world, and the fact that some of these IOCs themselves have faced some financial headwinds in recent times. I mean, one of the main reasons that Shell also declared it would refocus on the offshore was because, you know, it had to write down huge amounts in its asset base in North America, in its shale assets, and its half-year profits weren't that favorable to such a diverse and an expanding portfolio of assets.
Now, according to your research also, you say the total number of blocks divested by IOCs and national oil companies since 2010 could surpass 22 by 2014. Do you think perhaps this is a moderate number? Do you think it could actually go much higher than that?
I think it'd actually go much higher than that. And it's interesting because one of the things to be observed is that IOCs might also be taking cues from one another. Chevron would have observed the process that was started by Shell and probably thought this was a good time to do so. The other interesting trend is there seems to be a bit of a domino effect. If you take the example of OKLNG, one of Nigeria's planned liquefied natural gas projects, BG left that years ago. Chevron recently left, and there's also speculation that Shell may also be exiting. So I think IOCs also generally take investment comfort from each other, and if they see that the trend is pushing towards the local indigenous space, I think we will see a lot more blocks divested, assuming that the process progresses smoothly in terms of the regulatory environment.
Now, let's paint a scenario now with all this divestment going on for the sub-Saharan region, for the oil producers in sub-Saharan West Africa and those in mid-Africa. How do you think the matrix is going to change in the short to medium term? And who do you think could emerge as the biggest players going forward?
Well, I think certainly for the Nigeria story is one of the local content development and local content story, which has featured very prominently. And I think we're likely to see that trend continue. In fact, I think that the government's plan to boost production in Nigeria to above 3 million barrels a day will increasingly depend on the ability of local companies to come through and successfully play in the upstream. But elsewhere in the region, I think we're going to see some winners emerge in places like Ghana, with some of the super independents like Tolo Oil featuring more prominently, but also other junior companies. I also know Ghana is pushing through a local content bill due to be passed later this year. We might start to see the beginnings of a new and strong local oil industry in that country. But I also think we shouldn't forget some of the other countries like Cameroon, Congo, Brazzaville, Gabon, Equatorial Guinea, where this new pre-salt system, which might mirror the huge finds we're seeing by Petrobras in Brazil, start to emerge. And there I think we'll see both a mix of international oil companies as well as independent and junior explorers featuring more prominently. And I think the final trend I wanted to make is that many of these junior companies and local companies are increasingly able to raise funds on foreign capital markets. The most recent of which we're seeing in Nigeria is LECO, which successfully listed on the alternative investment market in London recently as part of its funding program in the near term.
Well, thank you so much. Well, okay, we're going to have to leave it there. Thank you so much for giving us your own perspective on that topic. Rolake Akinkugbe, Head of Energy and Oil and Gas Research at Ecobank Nigeria, looking at the recent trend of divestments by international oil companies in Nigeria and, of course, on the African continent.